It is 20 minutes to 10 on Wednesday, the 29th of April. My name is Boaz Shoshan, and we are back with another market broadcast. And on today's broadcast, we have Sam Volkering, the tech specialist over here at Revolutionary Tech Investor. Now, Sam, thank you very much for joining me on today's broadcast. In yesterday's, we were discussing with my colleague Nikolai Hubble about what letter the recovery shall look like. So, of course, we've all been hearing about U-shaped recoveries, V-shaped recoveries, and W-shaped recoveries. But there was one that Nikolai thought was apt for this situation, which I think you'd likely be on board with, which was that we're not going to get any of these quite linear shaped recoveries, but instead this is going to be an X-shaped or an X-rated recovery, because what we're experiencing now with the Wu flu lockdown is that some sectors and some businesses are simply going to fail, and some are going to boom. And I thought this tied in really well with your view on technology in general and how it's accelerating and sort of becoming larger than life. For so many real economy, physical economic outlets, the death of the high street, and the death of things like the Royal Mail and the likes, when the likes of Amazon are superseding it with FedEx and things like that. What do you mean? Do you think we're in for an X-rated recovery? I mean, does this tie in well with your stuff?
Thanks for having me to start with. And look, I mean, I get what Nick's saying. Is it an X or is it a K? I mean, if you want to get into the semantics of it, I'd argue he's probably talking about a K recovery, and that the extra part of that K is that some companies are just going to stop dead in their tracks and fail. So, but for me, like we were saying off air before, why limit yourself to the alphabet? If you're a fan of emojis, perhaps, then we could be looking at a rocket style recovery, or if maybe you're in the bear camp, then you might be a little bear face with a bomb next to it. So there's plenty to choose from. But for me, I think once we start to get a clearer view of coming out of lockdown and what businesses are going to be able to do that faster than others, it's going to be this weird staggered relay race of some stocks doing a V, some stocks doing a U, some stocks doing an X and a K, and some just blowing up. So for me, it is the alphabet and wingdings and emoji city, if you want to look at the kinds of recoveries that we could be looking at. And frankly, I think it's awesome because it's a stock pickers market now, right? It's if you're a passive investor in this kind of market, you're going to get your pants handed to you. So
yeah,
I love it. I think markets like this are great. We don't want to downplay the severity of the situation and the cost to families and lives of people that are dying and all that. But at the same time, our job here is to look at the markets and to give insight to our readers and listeners as to what action they can take and what they can do. That's our job. And right now, I don't think there's been a better time to be picking stocks in the market. And I'm now actively recommending stocks to subscribers that I think are really primed for bounce back as we come out of the lockdown period. The government is very, very well aware that they cannot maintain a lockdown of the entire economy for much longer, because the economic ramifications of that, both financially, economically, socially, are far, far greater than they probably anticipated they would be. So continuing on this current trajectory without some kind of exit strategy, it's going to crush the UK economy. So I think we're going to come out of it sooner rather than later, and I think there's going to be a lot of opportunities at the back of that.
Yeah. On that note, when coming out of it sooner rather than later, I think one of the biggest questions that I'm puzzling over from an investment view is whether or not the habits that are being formed now and the habits that we had prior to this, which of these sets of habits are actually going to endure once this is over. And so by that, I mean, is everybody going to be desperately wanting to fly and take a holiday in a foreign country after this? Or are people actually going to continue their working? They've realized that they enjoy working at home more than at the office, and that they're going to keep using Zoom and all these publicly traded internet giants. I mean, which of these is going to play out? Because I get the impression from my end that a lot of people from my age group, at least, are going to be really sort of dying to go to the pub and go fly places, and really get out of this sort of self-isolation mode. Whereas I think if you're from the older bracket, you're still you're still much more wary of the virus. That maybe some of these habits that we've taken up are going to endure for a fair bit longer. I'm just wondering which of these is gonna turn out. And I think maybe the longer that we're in self-isolation, maybe the greater the impact of this will be. What do you think?
I think that people have short memories, and that we will forget about this faster than people realize. Kit wrote something really interesting yesterday about human nature and people taking a course of action with regards to things that they can see, but things that come up from behind them and they can't see, they almost completely ignore. And human nature is just one of those interesting things. I saw a really interesting video from an Australian sports guy yesterday as well, just coincidentally talking about human nature as well. And he had been asking one of the great Australian rules coaches what makes the great players great. The story goes on a little bit, but the eventual outcome is that he said what makes the great players great is that they're better than human nature. And what that really means is that they do the sorts of things that we aren't necessarily hardwired to do. That we look at, we look at things that in a contrarian way. That's very much against human nature. When everyone is terrified of the virus and is petrified that lockdown's going to linger on for another year, and that the whole world is going to change, and that we're going to be doing a lot more from home, and we're going to stop global travel, all that sort of thing. That's what our human nature tells us right now, because we're in the midst of this really uncertain, crazy, scary time with a lot of fear just bombarded at us. And so human nature wants to recoil and from all that and say, no, I want to not be exposed to death, and I don't want to have to I want to change my ways to protect myself. But I think the reality is that it will very quickly return to normal, and people will just be like, actually, you know what, I really miss going out and socializing. I want to be going to work. I want to be free to do the things that I used to do before. I don't want to be told that I have to stay at home. I don't want to be told that I have to wear a mask on public transport. I don't want to be told that I have to, restrict my international travel. And so I think that, when we slide through into next year and get on top of the virus, and there's, even if it hangs around as a seasonal part of the flu, and there's a vaccine that gives us the antibodies to water it down so that we get no more than a cough and a phlegmy throat like we do when we get the flu anyway, but on the bulk of it we're pretty much protected. I think people will just completely forget about this, and in another couple of years we'll look back on the great toilet paper crisis of 2020 and have a bit of a chuckle about how mental everything got. And in reality, by that stage, everything will be hunky-dory.
Yeah, well, it definitely seems plausible. But it'll be interesting. I think some of for example, so Zoom is one of these stocks that has had a very good time as a result of the lockdown. So I believe it was up 132%. This stock. And incidentally, there is another stock called Zoom Technology, which doesn't do web hosting at all. It doesn't do conference calls or anything.
It's a security trading company,
right? And a lot of people falsely thought the Zoom Technologies was the same as Zoom, the teleconferencing app, and as a result, Zoom Technologies actually went up by many thousands of percent. relative to it completely outperformed the real Zoom. I think at the end it might have been maybe even 38 times from its original price. It was an incredible.
Yeah.
I think it's because it was relatively illiquid. It
Yeah.
created this massive price appreciation. But before, of course, people realized that Zoom Technologies is not actually Zoom. And it's one of these very interesting narratives where the idea of an efficient market seems to be clearly not. This is not an efficient market. People are literally just picking the wrong stock and flooding into it as a result of this thing has to go up during this period. But do you think the likes of Zoom, which of course is up 132%, so a very sterling performer, do you think that's going to remain after this is over? Do you think these companies that have managed to make a big push during the lockdown, they've managed to subsume so much of white collar office life? Do you think they're going to hold on to that? And do you think they're going to really sort of build on that and become even bigger companies and manage to infiltrate our lives even more? Or do you think that just as you say, we have short memories and the tide is just going to pull away from these companies and go back to where they were before?
I think on the bulk of it, yes, the tide will pull away. That Zoom story is interesting. The SEC actually ended up putting a trading halt on Zoom Technologies because they realized that people had mistaken it for Zoom.
Right.
Video communications. What that goes to show is that investors or traders or a mix of both are desperate to find returns in the market. That desperate, they just need something, and even the sniff of a name of a company is sufficient for people to start throwing money effectively against the wall in that situation. And Zoom, the actual video communications company, is interesting because they had this immense spike of new users, but Zoom's not particularly sticky. So you compare that to something like Netflix, where in order to get Netflix to start with, you've got to pay, you've got to subscribe. Otherwise, there is no free Netflix. Zoom, on the other hand, is a freemium model. You get the free service. There are some restrictions, and if you want the beefed up extras, then you got to pay for it. That has its point in the market, but it's not particularly sticky when you can shift around and use WhatsApp, or you could use Google, or you can use House Party, all these sorts of other options that are out there. And so I think that once people are able to go and see each other, meet anywhere, or go back to the office, it's Zoom's going to see the tide run out. And I think that it's been pushed up on the idea more than the longevity of the stock. So something like that, are going to struggle. But again, then a company like Netflix is really sticky. I've thought about canceling Netflix 100 times. But then at the end of the day, it's just kind of like, what's £9 a month? And there's occasionally a good show that keeps me sticking around. So Netflix has a much more sticky model. And so I think that a company like them is going to benefit from it, absolutely, because they're not going to see that tide push out like others do. So when you're looking at companies that have seen a benefit, online education providers as well have seen a significant uptick in users. When we return to I say normal, but society's never been normal. But let's say, for argument's sake, to return to a normal society, I don't think a lot of these operations are going to be as sticky as they anticipate, or the market anticipates. And I think that's going to be a risk, is that while people might have missed these as a bit of cover in a market crash, and they may have missed the opportunity to be in these sorts of stocks in this particular crisis, if you start plowing into them now, I think that's probably a mistake, because if you're in the wrong ones when the tide goes out, you're going to be left holding the bag. And I think there's a lot of industry now that's got that great excitement about it. It's been somewhat shockproof during this crisis. It's these online communications and connectivity kinds of companies. And I think there's a real risk that they're going to fall significantly in value once we come out of this, and once the market realizes that these users that have come on are leaving in droves and they're not as sticky as they thought they might have been.
That concept of stickiness, I think, is I think that's quite a powerful concept. But perhaps some of our listeners are not familiar with it yet. Could you expand a little on that, on what it really means when it comes to the how people stay with the service, goods and services that they like, and how some companies which aren't sticky, as it were, are very transitory, and they just have sort of these phases where there's a lot of people adopt their model, and then it just sort of phases out. Could you expand on that a bit?
Yeah, I mean, so stickiness basically refers to the ability of a company to keep and maintain its user base. So, if I'm a customer and I come to a service, like Disney Plus, just for example, is, everyone's sort of heard or seen about Disney Plus. I come to Disney Plus, and so my initial foray into that service, my experience on onboarding and the ease of onboarding into that service, what I have to do to get access to that service and maintain access to that service, and then importantly, my experience while using that service, that all plays into how sticky a customer is within a service. So with something, like I said, like Netflix or Disney, you've got to pay to get your foot in the door. So immediately, that's quite a significant point of contact that keeps that stickiness, again, to use the word, because I've had to depart with my money in order to access that service. So I've had to make a significant decision just to even get on board. Whereas then you look to something, as I said, like Zoom, where if I want to get access to Zoom, I just download the app. Now that's super easy and that's an enjoyable process to onboard. But then my incentive to stick around depends very much on my user experience, and then also alternatives in the market. So, when you're on a Zoom call with 20 other people, and I'm sure, some of our listeners have done this, and it might not necessarily be Zoom, it might be House Party, might be a whole bunch of other different, video conferencing apps, and you're on with a large group of people, you find it's a horrific experience because everybody's talking, nobody's using headphones, there's feedback everywhere, and it is actually video conferencing en masse like that is just horrible. And so all of a sudden you quickly find that that's a point of pushback. And so that sort of decreases the level of stickiness with some of these companies. So when you've got the option to be able to go back into the office and meet as you would, that's going to be a preferred option for people, as opposed to, all working from home. Because what we found is, and what we're seeing a lot of when it comes to this sort of thing like video conferencing, is that people are not enjoying it. They're actually finding they're doing more Zoom meetings. They're being more inefficient with their time than they would have been having gone to an office and having regular face-to-face meetings. So the concept and the idea around this remote working from home, utopia, the reality is starkly different from the concept of it. And so companies that are involved in it, they're not as sticky as people think they are when you actually get to using them and you actually get to understanding how it works and then what sort of alternatives we either had in the past or will have in the future. So, there's a whole different range of things that create stickiness to a company and to a customer within that company. And if you can keep those users in and lock them down and have the experience, the onboarding experience, the user experience, and then the ongoing experience to give them some sort of loyalty and build up this brand loyalty and this fierce tribalism even, like what you find with Tesleratis, right? People that love Tesla or that love Apple, there's a fierce brand loyalty there. And so that's another point of Apple's stickiness is their exclusivity and their aspirational brand. Once you're in the Apple world, there's immense loyalty there. That's a point of stickiness. And not all companies can do that, of course. You've got to be pretty special. And companies like Tesla and Apple are probably two of the best at doing that. But if you can do that as well and get those people to be immensely and fiercely loyal, then, that's where real power, real value starts to come from.
Yeah, there is. It does seem to me there's an incredible passivity with being on a video conference call, which it just just lacking any of the sort of physical um, sort of all of the physical, social, all the body language that everyone
Yeah.
has. It makes it incredibly. It's almost like I mean, you effectively are. You're just watching a Skype call just with loads of people on it.
Yeah.
I wonder if you may have seen it. But one of these unicorns called Bird, they fired 400 of their
I
employees.
saw this. Yeah.
Yeah, last week, and it was just through a one-way Zoom conference call, because they hadn't actually paid for the Zoom product in its entirety. Not all of the people that were being fired on the call couldn't even join it because they hadn't paid for the full Zoom package, so they couldn't get enough members, enough users onto that call. Because of course that's how the freemium model is. If you want more people on the call, you need to pay for the full package. So even all the people that they wanted to fire, they couldn't. They didn't even get to be on the call. They had to find out secondhand that they'd fired all these folks. And it was one way. So the microphone only went from one of the microphone. You couldn't respond to this, and it was just the head of communications who was
Probably a good thing.
who was reading out this script. Yeah. It just seemed an incredible, like it's that passivity, but it's flipped around into one of what should be one of the most sort of serious, what properly thought out, properly planned, and just respectful procedures that companies can do. And it seems like
sorry, I was just going to say, and in those situations as well, they would have been better off just emailing everybody or having everybody in a group chat on Microsoft Teams or Slack. And so that's when you start to really look at how effective people are at working from home, this remote working, and everyone's getting quite excited about this whole idea of, maybe this is going to change how we work. And it may do if people utilize it in the right way. And I think that organizations like Microsoft and Slack and their platforms, so Microsoft with Teams and Slack obviously with their Slack product, those are two products that are sticky because the actual user experience for those and the ability to collaborate without necessarily having to go through all the video communication stuff, which is something that they both do offer anyway, that is more powerful than something like a Zoom meeting or anything like that. So there are, as I said, there are going to be, and this comes down to Nick Hubble's X-rated recovery, is that there are going to be some winners out of this that are starting to win now and will continue to win. And then there are some that will be losers that really aren't going to benefit from this at all. And if anything, are just going to get continuously smashed. So this is really back to that central sort of idea that we're talking about, is that right now, if you can't just sort of blanket look at the market and hope for the best, because there are going to be pockets of industry that are going to be far, far greater at working through this and coming out the other side of it than others. And so it's really important for investors now to be more active than ever with the stocks they're looking at and the stocks that they're buying and the stocks, importantly, that they're avoiding. And so I think it's going to be one of the probably the byproducts of all of this is a much greater return to active asset management as opposed to passive asset management and looking at things like index ETFs and all that sort of junk.
Yeah. On one closing note, if we could, Sam, you say you're quite bullish on the stickiness of Slack. Slack was interestingly one of these tech companies that IPO'd not in 2020, but in 2019. And at the end of that decade, you saw these these big tech companies that have amassed these vast private valuations going public. And most of the time at the end, they did really, really poorly. The stock really did dump for the likes of Uber and Lyft when they finally went public. And Slack did IPO in 2019. And interestingly, it from the very beginning, IPO'd at around, I think, $37.
Yeah.
And then it fell from there and declined throughout 2019, and it was kind of middling through to the end in the sort of middle of
I think it almost halved in price.
Yeah, but let's see. I've opened up a wee chart of it here actually, and interestingly, it is definitely doing a lot better than it was in December. So looking at like $26 here, and it's got absolutely crunched in March, as pretty much everything did, and then it's bounced back to actually managed to get to an even higher, the highest it's ever been this year in April. What do you make of that? I mean, if you think that people are going to stick with these companies, even after this is over, do you think are you bullish on Slack at all?
I think the two winners out of this will be Microsoft and Slack. I think that Teams is pretty good, and I think that Slack is pretty good. And having used both and having a pretty good knowledge of both, I think they're both good companies that are worth a real hard look at. And I think that out of all this, that they're going to be I think they'll be two of the winners out of it, to be frank. But yeah, it's definitely worth a closer look for investors, I would say.
Well, that's a very interesting take on it all. Sam, thank you very much for joining me.
Thank you.
That was Sam Volkering over at Revolutionary Tech Investor. Some very interesting insights on the topic of stickiness, which I've only seen a few people write about in much detail. And Sam has a very interesting view on it. That's all we have for today. But later on today, actually, there will be another podcast going out, which will be hosted by James Allen and Kit Winder. Now, as I'm sure you will know by now, they hosted something called the Beyond Oil Summit, which is all about the future of energy, and it came at a really opportune time. So Kit had actually been working on this for quite a few months now, speaking to some of the top folks in the renewable energy sector. Some really big names came through the office and sat down with him for a big chat. And of course, we've been posting these recently, and it came at a very opportune time because, of course, we saw oil prices go negative recently, and the oil price in general in Brent is not looking all that healthy either. So it came to a very, very opportune time. But for this bonus podcast that they're going to record quite soon, just after we finish recording this one, they're going to go through some of the feedback, some of the questions that they've received about this event and about their own thoughts on the matter, and they'll be recording that just later on today. So if you are interested in that, do give it a listen. I know I will be. It's been a very interesting event that they've hosted, and it come, as I say, at a very opportune time. So give that a look. That should be out later on this afternoon. But that is all from me today. I shall be back tomorrow, and we shall have Dan Denning from Australia on the call, and also I'll be bringing on our publisher Nick O'Connor. So be sure to look out for that. But that's all for today. I hope this finds you in good health and in good spirits, and we'll be back with you tomorrow.